Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, October the 15th. The year's 2019. Let's talk trading. Finding your own way. I think I might stay with this theme for a while because it's really important that as a trader, you mind your own business and you find your own way. Now, that doesn't mean you can't learn from others, but what it means is, the final piece to the puzzle is when you put together your trading plan, your way of trading. And so, of course, we all learn from each other. We learn from those who've come before, but we don't have to blindly follow. You have to trust yourself. You have to be able to separate what makes sense from what seems to be nonsense. It's kind of funny because I was listening to a trading blog yesterday, or podcast, I guess it's called, and the trader was talking about basically, finding your own way because they listened to other people and none of it worked, and then sooner or later, something clicked for them and they put together their own way. But then they go on to, of course, they have a website and they've got a book to sell and a seminar to sell. And it's like, oh, it's just so funny because one of the things, I teach traders to study is psychology rather than trading. In other words, you don't really need to study trading books. Study psychology books because it'll help you learn how to focus your mind and control your mind. But I also like to study marketing for various reasons. And one of them is so I can see what they're doing and know what they're doing so they can't do it to me. It's kind of like, know your enemy. And it's just so funny how so many of these traders out there purport to have these systems, but they want to sell you this stuff in their books and seminars and all of that nonsense rather than just say, hey, here's how it works. And one buddy of mine, who I guess you could call him a skeptic, says, you know what? If somebody has something that works, they're not going to share it with anybody. And it's like, well, I don't necessarily agree with that, but I do understand the sentiment. Now, fellow traders, you know, when you think about it, it doesn't matter if you pick up somebody else's system or your own. If you don't have risk and money management in place, it's just, sooner or later, you're going to meet your impending doom because without the risk and money management, all could be lost on one trade. And you don't want that to happen. You really don't. And it's just so simple. You just have to determine how much you're willing to lose on a trade. In other words, if it goes against you $10 or 10 pips or whatever increment you choose, that's when you say, you know what, this trade isn't working out the way I want it to work out, so I'm pulling the plug because I don't want to make matters worse, because all big losses start out as small losses, and I don't want to be part of that statistic. It's so simple, yet so many traders overlook it, and that's why I stress it each and every day. Now, remember, boys and girls, fellow traders, this is trading and your results may differ from mine because these videos are for educational purposes only. It's not trading advice or trading signals or any of that. And when you're trading, you have to understand it's very, very, very risky. And the best thing to do is to seek your advice from an accredited financial professional. That way, when they lose your money, you know it was lost by an accredited financial professional rather than somebody you listen to off of YouTube or some trading blog or forum on the internet. Okay, all that out of the way. You can see we've only had one gap that hasn't filled. Remember yesterday there was a bunch of pound pairs hadn't filled the gap. It's Tuesday. I alerted you Sunday. I alerted you Monday. Whether or not you took advantage of those alerts, I have no idea. But I'm just curious here. Let's just take a look at the pound here, because I think that was one of the ones that had a gap to be filled. And let's just switch over to the daily. And so you see here, if there was a gap down, it came all the way down here. Then it popped back up and we had a close right here. So if you tried for that gap fill today, not only did you get it, there was lots of pips to be made, lots. But as I stated before, your results may differ from mine. So just make sure you put your stop loss in place before you try anything I show you or anything anybody else shows you. Okay, look at dollar yen. Only 84 pips from that yearly open. Now, I've been showing you these trades for a couple of months now. You see, what is this? This is the first day of the month's range right here. And what's this? This is the first day of the week's range. And it happened to be an inside bar yesterday. Now, if you took either one of these breaks, you can see you're up, 28 pips, 34 pips at the moment. And notice something, we're getting into that range of the first day of the year. Simple trades, horizontal lines. We know the levels in advance. We know what to do in advance. All you have to do is place your trade, put your stop loss on, and then start managing the trade when it goes into profit. And that's true of any method, pretty much. And here you can see we just went over the opening, the August open, and it looks like we may have breached the February open. So we're really moving up here on the yen. And the ranges, once again, these opening day ranges, you can see here we broke through, I guess, what you call a triple top here, or quadruple top. This area right here. And notice how many of these were day one range highs. So those range numbers on the opening day seem to work. Now, I've been telling you about inside bar breaks. We had the inside bar break of the monthly last month. You can see here up 34 pips at the moment. Simple trades, simple trades. In fact, I received an email from a trader thanking me, and what they're doing is they're using the weekly monthly, just looking, taking that bias and learning how to try and capture that monthly range. You can see here ranges, we got 3, 6, 9 over 100. Very nice moves. You can see the move off of the open if you're a buy zone trader here. But right there, inside bar, break out of that upper wick zone, off to the races. Putting in a highest open here, monthly highest open for the H1 right there. Now, there's something else I want to run by you again, because whoops, I didn't mean to do that. Where were we? Here. You see, anytime price comes down and makes a low, you're almost always going to see a red candle, then it's going to be followed by a green candle. And when that happens, that's the time for you to start looking for a reversal. So right now, you can see we've got this highest open happening here, but I want to show you something. See, we're on H1. I'm going to shift over to H4. At least that's what I'm attempting to do, but the computer is taking its sweet time. Here we go. So now we're looking at H4. If you're looking for a reversal and you're getting a signal, move up a time frame till you get the opposite signal. So if you were at 30 and then you go to H1, you got the same signal, go up here. You see you've got 43 minutes. Let this candle close. Okay, and as you can see, the H1 just went back to green. Just let it close because you'll see you had a close here, then it went up, but now you've got an opportunity. By letting this candle close, it can save you a lot of drawdown and maybe possibly save your stop from getting hit. Just wait. That's all you have to do is just wait. Sit on your hands. Leave the room. Play a game, but just go ahead and let it wait. Because chances are, by the time this candle closes, maybe it's green, and if you had already shorted, you'd be stuck in that trade. Maybe you get stopped. But if you just let that candle close, then maybe it goes up and then it reverses. So just look at, just move up a time frame. Okay, once again, close minus open. You can see a lot of movement in those pound pairs. Now, where was the pivot point? Just below the weekly open, which was below the daily open. So we had a slight bias because to the south side, but not much because it's still within the buy zone area here. But it hit the pivot and then it reversed out, took a signal here long, and boom, to the upside. Red rats, get ready. And once again, sports fans, this is, a really simple. Everything, most of this stuff comes from the rat zone indicator, this one right here. The other things, the template name and the buttons here, and the time, and the time over here, that's all different. But the main stuff is all in that one indicator. That was my all-in-one phase, trying to put everything in one indicator so you don't have to load the chart. Now, weekly pivot, we're getting further and further away from that weekly pivot. So we'll have to see what happens. Maybe later this month, maybe next month. Missed pivot here, we're moving further away. Price action, 3 ball, look to reverse. Wick zones, in and out, in and out. Horizontal line trades, look at that. Monthly high, daily high, weekly high, cut through all of them from the previous. Now, I want to switch to another screen here on the range. So we've got daily range here, so far 73 for the week, 85. Once again, showing the first day of the week in the shaded area, that weekly range, and then we moved up. I want you to see here, we hit the ATR, our 50% of the ATR, the min and the max, and I'm starting to look at ATR definitely as places to take profit and sometimes reverse. So usually if price actually hits the daily ATR, it's time to trade. But also, if you're trading, if you're going a longer term, look for the weekly open plus half of the ATR ranges. And if you want to know, those indicators are the TRO ATR lines. Simple stuff. And it was really funny because I went out to MyFX book and they don't like my videos because it has contact information on it, so I sent them an email asking, what is it you're trying to protect or prevent? I mean, the internet's all about, networking and finding out information, but I guess they want to make it harder, not easier. Okay, fellow traders, as you're trading this week, just remember, it's not what you trade, it's how you trade it. So drain the banks. And if you're new to this channel, come down here, hit subscribe, and everybody hit the like button, okay? Thank you.